Good morning, everybody. Update. I just want to let everyone know who is a subscriber to MMT Trader, or if you're on a 30-day free trial, I sent out a very important email right now with my thoughts about what is going on. So definitely read that email. Very important, okay? Now, for all of you loyal watchers of the Mike Norman channel, I will kind of bring you up to speed. But if you don't have the MMT Trader subscription, you're not going to get the full details. That was in the email. Okay, so sign up for a free trial. I'll send you the email right now. Go to www.pitbulleconomics.com and click on the tab that says products. You could sign up 30 days for free. Even if you cancel today, I'll still send you the email. All right, anyway, as you know, as of last Thursday, I came out and I was the only one, and you could check this, I was the only one who, right after that ECB meeting, and you can go look back at these videos, those of you who were subscribers, who are subscribers, you received an email right after that ECB meeting. I said the purchase of those corporate bonds now by the ECB, it's deflationary. And you know, for a long time I've been saying I've been waiting for the Fed to raise rates, and when they didn't yesterday, you know, I did a whole thing about how central banks now are really injecting deflation into the equation. They are impeding the growth of economies, which, by the way, we're seeing very good spending here in the United States. The Eurozone is a net spender, okay? Japan is a net spender. China is a net spender. So, I mean, the large economies of the world are pumping financial flows into the economy of the private sector around the world. So positive flows remain. Now, if you look at the numbers, and I just went through a whole exercise of breaking down these numbers, like what does it mean when the ECB buys, 5 to 10 billion euros a month of corporate bonds? How much income does it actually strip out? And I go through the numbers in that email I'm referring to. What would happen, for example, now the Fed is paying interest on reserves now, about 2.5 trillion in reserves, paying 50 basis points. That's 12.5 billion annually. So if they strip that out, if they went back to zero, yeah, you'd lose that 12.5 billion, maybe some multiple of that if you want to double it. But government spending is growing at 10 billion a month, and we're on track this year to hit almost 4.5 trillion in net spending, which would be the highest since 2009. We had a gigantic market recovery in 2009. Granted, we're facing headwinds now, but so the bottom line is this, and I'm calling it right here. You know me, I don't, waffle, I don't equivocate. I come right out and say it. I am buying into this market down here. Yes, we have had some additional headwind thrown at us, additional deflationary forces thrown at us through the actions or the inaction by various central banks, ECB, Fed, respectively, okay? However, if I use the swimming pool analogy that I like to go to, I think it helps people understand this in their minds. The water's still flowing into the pool. However, some leaks have sprung up. These leaks are annoying, okay? We'd rather not have them. We'd rather see the flow into the pool even increased, but the leaks are not enough to drain the pool. It's just going to fill up more slowly, okay? So figure out what that means. Stocks will recover. We're not going to go into a recession. I'm putting that out there. I am putting that straight out there, and you could hold me to that, okay? Furthermore, the reaction in gold today, this $25 jump, total emotion, okay? And if I've learned anything over my almost 40 years as a trader, it is you gotta fade emotion. And I will tell you that this entire gold rally of the last 2 weeks since that whole George Soros is buying, it will be retraced. It will be correct. That's not to say gold won't go up long term if spending flows stay positive and strong, because it will. By the way, we still have our gold ETFs in MMT Trader. I had to get out of my June gold futures because it was expiring, but we still have our long gold ETFs. So that's the summary. I put a lot of things out there, without equivocation. I'm not, this or that. All right, that's what I do. So now you know. And all of you who are on the MMT Trader, read the email. I break down the numbers in there. And you could decide for yourself. But I think the numbers are very clear. This looks scary. This looks frightening. I would say it almost looks recessionary, particularly the way materials markets are reacting and stocks. But I'm saying no recession. Okay, see you later. Bye.